This is Cost and Management Accounting, an introductory lesson series. My name is Huijun Chen, and I'm from the Department of Accounting and Information Systems, College of Management at Asia University. Our lesson 2 will be focusing on job order costing, which will help us to calculate unit product costs. This is a definition for job order costing provided by ChatGPT. I asked ChatGPT to define job order costing and give us an example within the airline industry. The reply shows that job order costing is a cost accounting method used to determine the cost of producing a specific product or service, where the costs are allocated to individual jobs or orders. It's commonly used in industries that produce customized products or services, where each order is unique and requires a different amount of resources. Within the airline industry, a very good example for job order costing would be the cost of operating a charter flight. When a customer requests a charter flight, the airline must allocate the cost of the flight to that specific order. The costs associated with the charter flight will include fuel, maintenance, crew salaries, and other expenses related to operating the aircraft. The airline would then charge the customer the total cost of the flight plus a profit margin, based on the estimated cost of the resources required to complete the job. This allows the airlines to accurately track the costs associated with each individual charter flight and ensure that they are charging customers appropriately for the services provided. Why do we use job order costing? There are three keywords which will help us to answer this question. The first one is assign. Job order costing helps to assign costs to products or services for planning, controlling, or decision-making purposes. The second one is determine. Job order costing helps to determine the value of ending inventories and the cost of goods sold for external reporting purposes. The third one is absorb. Job order costing is a common type of absorption costing system, which assigns all manufacturing costs, both fixed and variable, to units of products. So units are said to fully absorb manufacturing costs. When do we use job order costing? There are also three different situations which will help us to make the decision. The first one is when many different products are produced each period. And the second one is when products are manufactured to order. The third one is when the unique nature of each order requires tracing or allocating costs to each job and maintaining cost records for each job. The last question is who question. Who will use job order costing? Those who will use job order costing include large-scale construction companies, designers and printers of business cards, aircraft manufacturing companies, or preparers of airline meals. Because they all produce many different products at the same period, their products are made to order, and each order is unique and require tracing and allocating costs to each job or order. Let's do some reviews. Do you still remember manufacturing costs? Companies generally classify manufacturing costs into three broad categories, and they are direct labor, direct material, and manufacturing overhead, or DM, DL, and MOH. In this lesson, you will see how each of these three product costs is assigned to jobs for purposes of computing unit product costs. Now we will learn how to trace direct costs such as direct material and direct labor to jobs number 1, number 2, and number 3. We will charge direct material and direct labor costs to each job as work is performed. For example, job number 1 requires 3 pounds of direct material and 2 hours of direct labor. You need to put this on the record so that direct costs can be traced to the job. After ensuring all direct costs can be easily traced to the jobs, we need to allocate manufacturing overhead to jobs. Manufacturing overhead, including indirect materials and indirect labor, are allocated to jobs, rather than directly traced to each job, because they are all indirect. You have to think about a reasonable way to allocate these indirect costs to jobs. As we already have the foundation knowledge, we will move on to our learning objective number 1, that is to compute a predetermined overhead rate. Because it's impossible or difficult to trace overhead costs to particular jobs, manufacturing overhead consists of many different items ranging from the grease used in machines to the production manager's salary, and many types of manufacturing overhead costs are fixed, even though output fluctuates during the period. So we need to use an allocation base, such as direct labor hours, direct labor dollar, or machine hours, to assign manufacturing overhead to individual jobs. This slide shows how to calculate the predetermined overhead rate. The rate is used to apply overhead to jobs and should be determined before the period begins. You take estimated total manufacturing overhead cost for the coming period divided by estimated total units in the allocation base for the coming period. Ideally, the allocation base is a cost driver that causes overhead. But what is a cost driver? A cost driver is the direct cost of a cost, and its effect is on the total cost incurred. For example, if you are to determine the amount of electricity consumed in a particular period, the number of units consumed determines the total bill for electricity. In such a scenario, the number of units of electricity consumed is a cost driver. Predetermined overhead rates that rely upon estimated data are often used because actual overhead for the period is not known until the end of the period, thus inhibiting the ability to estimate job costs during the period. Actual overhead costs can fluctuate seasonally, thus misleading decision makers. Now it's a good time to do an exercise to calculate a predetermined overhead rate. Here is the question. Harry's company computes its plant-wide predetermined overhead rate annually on the basis of direct labor hours. At the beginning of the year, it was estimated that 20,000 direct labor hours would be required for the period's estimated level of production. The company also estimates 94,000 of fixed manufacturing overhead costs for the coming period and variable manufacturing overhead of $2 per direct labor hour. The company's actual manufacturing overhead cost for the period was 123,900, and its actual total direct labor was 21,000 hours. Please, based upon this information, to calculate a predetermined overhead rate. Here is the answer to the exercise. Our estimated total manufacturing overhead cost is $134,000, which includes two parts, fixed part and variable part. Estimated fixed manufacturing overhead is 94,000, which is given in the question, and this is the variable part. 20,000 direct labor hours are estimated to be used at 2 per direct labor hours, so that's 40,000. So the estimated total manufacturing overhead cost is $134,000. The next step is to take the $134,000 divided by the estimated total direct labor hours, which is 20,000. Then you will get the answer for predetermined overhead rate. That is $6.7 per direct labor hour. Learning objective number 2, apply overhead cost to jobs by using a predetermined overhead rate we just learned. Let's try an exercise to apply overhead cost to jobs. Harris Company uses a plant-wide predetermined overhead rate of 23.4 per direct labor hour. This predetermined rate was based on a cost formula that estimated $257,400 of total manufacturing overhead costs for an estimated activity level of 11,000 direct labor hours. The company incurred an actual total manufacturing overhead cost of $249,000 and 10,800 total direct labor hours during the period. Here is the answer for the question. Our actual direct labor hours is 10,800 hours. Our predetermined overhead rate is 23.4, so you times these two numbers together, you will get the manufacturing overhead applied, that is 252 and 720. Learning objective number 3, compute the total cost and the unit product cost of a job using a plant-wide predetermined overhead rate. Let's do the concept check number 1 together. Job WR53 at the NW Fab Company required $200 of direct materials and 10 direct labor hours at $15 per hour. Estimated total overhead for the year was $760,000, and the estimated direct labor hours were 20,000 hours. What would be recorded as the cost of job WR53? The answer to concept check number 1 is D, $730. Our predetermined overhead rate is 38. Direct materials required is $200. Direct labor is 15 per hour times 10 hours. Manufacturing overhead 38 times 10 hours. So the total cost would be $730. Although job order costing can help managers to allocate indirect costs to jobs, it has some problems. Job order costing systems can accurately trace direct materials and direct labor costs to jobs, but they often fail to accurately allocate the manufacturing overhead cost used during the production process to their prospective jobs. Inaccurately assigning manufacturing costs to jobs adversely influences planning and decisions made by managers. Job order costing systems often use allocation bases that do not reflect how jobs actually use overhead resources. The allocation base in the predetermined overhead rate must drive the overhead cost to improve job cost accuracy. A cost driver is a factor that causes overhead cost. Many companies use a single predetermined plant-wide overhead rate to allocate all manufacturing overhead costs to jobs based on their usage of direct labor hours. It is often overly simplistic and incorrect to assume that direct labor hours is a company's only manufacturing overhead cost driver. If more than one overhead cost driver can be identified, job cost accuracy is improved by using multiple predetermined overhead rates. Learning objective number 4, compute the total cost and the unit product cost of a job using multiple predetermined overhead rates. Let's do the exercise directly. And here is the information to calculate multiple predetermined overhead rates. Dixon Company has two production departments, milling and assembly. The company uses a job order costing system and computes a predetermined overhead rate in each production department. The predetermined overhead rate in the milling department is based on machine hours, and in the assembly department, it is based on direct labor hours. The company uses cost-plus pricing and a markup percentage of 75 of total manufacturing costs to establish selling prices for all of its jobs. At the beginning of the year, the company made the following estimates. Total machine hours used for milling are 60,000 hours, 3,000 hours for assembly. Direct labor hours consumed for milling are 8,000 hours. For assembly, 80,000 hours. Total fixed manufacturing overhead cost for milling is $390,000, $500,000 for assembly. Variable manufacturing overhead per machine hour is $2 per hour for milling. Variable manufacturing overhead per direct labor hour is $3.75 for assembly. During the current month, the company started and completed Job 407. It wanted to use its predetermined departmental overhead cost and rate for the milling and assembly departments. So our first step is to calculate the predetermined overhead cost for each department. For milling department, this is a fixed part and this is a variable part. The total overhead cost for this department is $10,000. For assembly, this is fixed part and this is variable part. The total overhead cost for assembly is $800,000. The second step is to calculate the predetermined overhead rate for each department. Use the amounts determined on the previous slide to calculate the predetermined overhead rate of each department. For milling department, is $850 per machine hour. For assembly department, is $10 per direct labor hour. This slide shows the summary for information required to calculate multiple predetermined overhead rates. This is a predetermined overhead rate for milling is $850 and for assembly is $10. This slide shows the information to calculate the total cost for Job 407. The third step is to calculate the amount of overhead applied from both departments to Job 407. We need to use the predetermined overhead rate calculated on the previous slide to determine the overhead applied from both departments to Job 407. This is milling information for milling department, and this is the information for assembly department. For milling department, its cost driver is machine hours. For department of assembly, its cost driver is direct labor hours. For milling department, the total machine hours used is 90 hours. For assembly department, total direct labor hours used is 20 hours. So the amount of overhead applied from milling to Job 407 is $765. For assembly is $200. See, this is the cost driver and this is the cost driver as well. Step 4 is to calculate the total job cost for Job 407. We can use the information given to calculate the amount of the total cost of Job 407, and here is the calculation. The total cost for job 407 is $2,485. The last step, that is step number 5, is to calculate the selling price for job 407. The selling price of job 407 assuming a 75% markup. Here is the calculation. You take the total cost of job 407 plus the 75% markup, you will get the selling price of job 407. This is the answer. It is important to emphasize that using a departmental approach to overhead application results in a different selling price for job 407 than would have been derived using a plant-wide overhead rate based on either direct labor hours or machine hours. The appeal of using predetermined departmental overhead rates is that they presumably provide a more accurate accounting of the costs caused by jobs, which in turn should enhance management planning and decision making. Let's try an exercise. Harris Company has two manufacturing departments, assembly and testing and packaging. The predetermined overhead rates in assembly and testing and packaging are 16 per direct labor hour and 12 per direct labor hour respectively. The company's direct labor wage rate is $20 per hour. The following information pertains to job N60. Here is the information. You are required to answer number 1, what is the total manufacturing cost assigned to job N60? Number 2, if job N60 consists of 10 units, what is the unit product cost for this job? Here is the answer to the exercise. The total manufacturing cost is $753 and the unit product cost is $75.30. As we use a predetermined overhead rate to apply manufacturing overhead to jobs, most of the time we will either over-apply or under-apply overhead. How do we solve this under or over application? The amount of overhead applied to all jobs during a period will usually differ from the actual amount of overhead costs incurred during the period. When the company applies less overhead to production than it actually incurs, it creates what is known as under-applied overhead. When it applies more overhead to production than it actually incurs, it results in over-applied overhead. We need to adjust for over or under-applied overhead. The cost of goods sold reported on a company's income statement must be adjusted to reflect under-applied or over-applied overhead. The adjustment for under-applied overhead increases the cost of goods sold and decreases net operating income. The adjustment for over-applied overhead decreases the cost of goods sold and increases net operating income. In this lesson, we mainly introduce job order costing within manufacturing companies, but actually job order costing is also good for service industries. It is used in many different types of service companies, including law firms, accounting firms, and medical treatment. This is the end of Lesson 2 for Cost and Management Accounting, an introductory lesson series. See you soon in next lesson.